Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Taiwan is a foundry-heavy market, so it is seeing some lows.
The margins declined on a quarter-on-quarter basis by 130 basis points on account of a wage hike.
Iran reported strikes on, a perimeter of a nuclear power plant and 2 railway bridges.
This is the fourth quarter of consecutive growth.
Now, this stake will be acquired from the promoters at a price of rupees 698 per share.
So 24,150, it's about 0.8% higher. The Nifty Bank is up 0.75%, 0.9 actually.
If I look at IT as a broad space, sentiments have been the overhang.
This approval certainly removes the regulatory overhang that has been going on since quite a while.
The market's looking to end the week on a positive note.
Whereas our JLG book will continue to grow at around 10 to 15%.
Chosen to reduce its provision, which is not necessarily a bad thing.
Continues to be a market in the green. So saw a 33% month-on-month drop. So across the board, there was a big decline that we saw.
Well, that was the day so far. 1 hour to go before we wrap Friday's trading session and the week. And the Nifty is above the 24,200 mark. It's been a steady positive session. 1% gain on the Nifty sensex as we speak, with the mid-caps outperforming. You're watching Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I am Reema Tendulkar. With me are Sonal and Hormuz. Hi, guys. Afternoon.
Hey guys, good afternoon. It's been a long week, longer for you, Reema. So you started with the earnings.
So volatile, right? Like the whole first half of the week was markets coming under pressure, and then the rebound yesterday and today.
The West Asia volatility came back, and that is something that the markets avoided last 2 days. So we are ending the week with Nifty so far above that 24,200 mark, as Reema has been mentioning. What a performance by the mid-caps today. That has definitely supported the market moves that we've been seeing. Bank Nifty doing really well, and the earnings coming in thick and fast for PSU banking names. Indian Bank, for instance, really fired up the sentiment that we saw in the PSU banks, and a lot of earnings. The commentary from Muthoot Microfin, they might upgrade their guidance in their quarter 1 numbers. So it's been good day so far for financials. The big question is whether we sustain that or not, or something happens over the weekend.
We hope not. Definitely hoping not for anything to happen over the weekend. But yes, it's been a good a couple of days for the markets after the rebound that we have seen, and 24,270 is the level that you need to watch out for going for a positive close on the index. What has already turned positive for the week has been the Nifty Bank. At 57,938 was that level that it had to cross. It's trading well above that. It's trading above the mark of 58,100 now, so a 900 point up move on the Nifty Bank. The star of the day undoubtedly has been Indian Bank. You just heard the management from just a few minutes ago, 10% higher on that stock. But on the flip side, Bank of Maharashtra's numbers have left a little to be desired, I guess, for the street. The stock has cooled off very, very sharply from the highs of the day, and is now just down up less than 1%. So it's a sharp cool off. There's some rise in provisions on a sequential basis for Bank of Maharashtra. We'll get more details on that, of course, in just a bit. But the day, of course, also has belonged to the mid-cap index. The mid-cap index is at a record high. In fact, it has, from the lows that it made on the 2nd of April of this year, it's up 17% from those levels. And if you take a look at the movers as well, it's a very diversified list of movers. Oracle Financial is possibly the only IT name that is still trading with gains on a year-to-date basis.
And Ramco Systems.
And
that's
Ramco
the
Systems,
other products company. So both of them are the ones with gains. Yeah.
And of course, Oracle is of course at a 52-week high as well in today's session. And Vodafone Idea 64, BHEL 56, BHEL I was meant to say, Radico Khaitan and Prestige Estates too, seeing some healthy gains. Of course, there are a lot of other real estate names as well that have done well in the mid-cap index from the lows of April. But let's unpack the final hour of trade and tell you what's lined up on a closing bell. The market is holding on to the opening gains as of now. The Nifty is hovering around that 24,200 mark. The broader markets are doing well, as we just mentioned. The mid-cap index is at a record high. Metals are the ones doing well. Life insurance counters are also doing well because the industry has recorded a 21% growth in June. Yash will tell us how individual companies fared. Of course, IT stocks led higher by TCS. That itself is off the highs of the day. today, but the mid-cap IT stocks are firing away in today's session. We get you the highlights of the quarter gone by as well. And of course, the Nifty Bank, 900 points higher on that index. The Nifty PSU Bank is doing well as well on the back of very strong numbers from Indian Bank. The Bank of Maharashtra, though, has cooled off from the highs. We'll await some slippages numbers as to how they fare. And then, of course, the stock that has cooled off from the highs of the day.
Okay, all right. So that is what we have lined up for you on the show. But how should you position yourself in this last hour of trade? Bonanza Portfolio's Mitesh Thakkar is joining us now with some closing strategies. Mitesh, so far so good for the markets. What are some strategies you would like to advise our viewers? What kind of moves do you expect on the markets next week?
Yeah, good afternoon. So I think, day before yesterday when the market was falling, I was looking at 23,800, 850 as a support zone. That held. But it only means that we are basically back into that range of 23,800 on the downside to roughly about 24,354 on the upside. So I think we might head towards 24,350, 400, but not sure whether we'll get a breakout on the upside or see some continuation on the upside immediately. So for the timing, we're keeping that as the near-term target, 24,400, give and take a few points. And then if we cross that, 24,600 is the April high, which could also be tested. Having said that, on the stock side, I have buy on Union Bank with a stop at 161.5. Look for targets of 170. And Blue Star is a buy. Keep a stop below 1620. Look for a target of approximately 1700.
Okay, thank you very much for that, Mitesh. We'll come back to you. So for now, maybe a little more upside, but doesn't see a big breakout on the Nifty at least. But let's talk about India's life insurance sector that's showing no signs of slowing down. The June numbers highlight very strong momentum across the industry. The sum assured growing 21% on a year-on-year basis. Yash joins in with the details on this. Yash.
Well, just day before yesterday, we had reported that the June premium collection looked strong for the life insurance industry. SBI Life, Max Financial Services leading that growth as far as the June numbers are concerned. Now, that was premium collection. Today, what we're going to talk about is the sum assured, essentially the cover which the life insurance industry is provided in the month of June. That has seen a healthy growth of about 21%. Again, SBI Life leading a large part of that growth. SBI Life's sum assured in the month of June has grown at 43%. Axis Max Life Insurance, their sum assured has seen a growth of 35%. HDFC Life at 31%. ICICI Prudential Life at 26%. Canara HSBC Life Insurance, though it's small in size, but that company has seen a growth of about 87% when it comes to the sum assured in the month of June. Why is the figure on sum assured important? That's because it gives you an indication in terms of how the margins for the company are likely to shape up in the coming quarter. Higher sum assured could indicate that the companies have sold a larger portion of protection products, that is term life insurance products, where the sum assured is generally higher. And hence the margins on that side of the book could be higher for companies. So an indication as far as how the margins of the company could perform in the first quarter, the results which are about to come next week. I'll also speak about policy growth in the month of June. HDFC Life has seen the strongest growth as far as the new policies issued in the month of June is concerned at 14% growth. ICICI Prudential Life with about 6% growth. Axis Max Life Insurance with 13% growth. SBI Life with 5% growth. Canada HSBC Life has seen about 25% growth in terms of new policies issued. And finally, Life Insurance Corporation of India or LIC seeing a 5% growth in the number of new policies issued in the month of June.
Okay, all right, Yash, thank you so much for joining us. So that's about the insurance sector. By the way, Waterways Leisure, that should be the stock on your radar. It's just a recent listing. The debut was muted, closed at 17% or listed at 16% discount to its issue price at around 681 rupees a share. The company has now announced that there'll be a stock split. 1:10 is the ratio. Of course, they had announced earlier that they will be taking up this resolution. This has come by, but there is a big fall from the highs of the day The stock rallied on the back of this announcement earlier. It did well after that muted listed, but now again at the day's low. Bank of Maharashtra is the other one on the back of that lower net interest margin growth on a quarter-on-quarter basis that has come in lower both on a YY and on a quarter-on-quarter basis, and that's why that stock too has come up from the highs at the day's low for these two.
You know, now mentioning Waterways, it listed at a discount, ended 17% lower on its listing day, then had a 3-day winning streak going into today's session as well. So the IPO price was 808 and it's now down around 2.5% after the stock split announcement. Of course, mind you, it's very little float in the market. The promoters still hold around 89% after the IPO. So keep that on your radar. And of course, Bank of Maharashtra has cooled off significantly from the highs of the day. Ashish Chaturmota, the managing director and fund manager at JM Financial, is joining in now. Ashish, good afternoon. Thank you for taking out time. We've seen a lot in the market, which is now one step forward, two steps back. The earnings season has also begun, which will pick up pace over the next 2 weeks now. Do we just remain locked in this very narrow range because a very significant upside trigger appears to be missing, if that is the case?
Hi, very good afternoon. Thank you for inviting me on the show. So, as you rightly mentioned, yes, at least for Nifty, it makes a lot of sense what you said, because if you look at even from the earning growth perspective this quarter, we have not seen any meaningful recovery, and with even IT companies also not showing very strong set of numbers, I think the entire focus of the market remains on the small and mid cap basket, and this is the reason why, because of a very strong earning growth momentum which they showed in the last quarter, and now also we are witnessing the numbers looks quite promising, at least for this small and mid cap space. So I think even the banks, if you look at Indian Bank or even for that matter some of the PSU banks or some of the microfinance companies, the numbers are very, very encouraging, and that's where markets are going to reward these sub-segment themes within the larger themes. But as far as broader markets are concerned or Nifty is concerned, it looks like we are going to remain into this consolidation phase for an extended period of time. And as FIs are also not showing any significant interest, maybe some last 3 weeks some buying interest has emerged, but it is not meaningful enough to make sure that Nifty crosses 24,500 or 25,000 kind of trajectory.
Ashish, wanted to get your views on the IT sector. Basically, I think, what we gathered from TCS, the management commentary, the conference call, the numbers is that maybe the downside is protected. Expectations have been lowered. Valuations are at a 10-year low. And the companies seem okay to deliver on those very subdued, lowered expectations like TCS did. And maybe the near term is okay because the company is talking about Q2 being positive. They see demand picking up sometime in Q2 because of pent-up technology demand. Overall, FY27 should be better than FY26. So that's the near term. But I still don't think we've got clarity on what the medium term is going to look like 2 years, 3 years down the line, because we specifically asked the management of TCS that when do you think the new revenue from AI, new volumes from AI will offset the AI deflation? And he didn't have an answer to that. He's like, we'd like it to be soon, but we don't know. So this year, maybe the industry grows 2-3%, but we don't know whether it stays at 2-3% for FY28 and then FY29 it picks up. So that long-term clarity, medium-term clarity is still missing. So in that sense, what's the call now on large-cap IT names or mid-cap IT names or product companies? Like Hormus was talking about Oracle, Ramco. These are companies which have outperformed and investors have gravitated towards them.
So as far as for the large cap IT companies, or to be very specific about TCS, so the overall TCV is in a good shape. But the challenge is, if you look at the AI service business, it is a very lumpy business at this point of time, and it's a very short cycle. So if you'll see, the projects are typically 1 quarter, 2 quarter projects, and then again they have to bid and again win these. So this is not giving a very strong revenue visibility even from AI services or AI-led transformation businesses. So all put together, we firmly believe that with lesser discretionary IT IT spending, and then the challenges coming from the AI side of the story, and even the AI-led transformation business is not very, I would say, annuity income even at this point of time. So this numbers look very, very, I would say suboptimal, because if you'll see the overall quarter-on-quarter growth of the numbers, it is just 2%, and maybe from a valuation perspective, from a FCF yield perspective, it will look interesting, and that's not the case now. It was 6 months back also. It used to look interesting from a valuation perspective, but investors are not making money because the growth is completely missing, and there are no immediate reason to believe that IT is going to come out of this confused state at this point of time. So we are completely avoiding the large cap IT names. But definitely where our interest is lying is particularly companies like Coforge or Persistent, because of the kind of acquisitions they have done. And I think at some point of time, Coforge will enter into that 23-24% kind of growth phase. And that's where our top pick in the entire IT space would be Coforge. And as you rightly mentioned, on the product side, Oracle Finance is something which looks very promising.
Okay, all right. So you like something in the mid-cap IT space. Hold on. We will actually listen into what the management of TCS had to say about their AI revenue and on the Q2 revenue outlook as well.
Could be in the range of, in a given work, okay, when you renew it, or it could be about anywhere, what we see on a large project would be about 10 to 15%.
Over 5 year, or a 5 year project, or 3 year?
Overall project value, it could be 10 to 15%. But we expect that it should not be, maybe it may be volatile or deflationary in the top line, deflationary in the short run. But in the long run, we talked about so many other projects that will happen because of AI. So net, we still expect this to be positive, and there could be some short term volatility, and we are looking at what we are seeing and what we are doing. We are quite happy with the overall progress you have made this quarter. Difficult to predict because the deflation usually kicks in very quickly, and new projects, when people start leveraging it for their business transformation, that takes little more time. Overall, still I would say Q2 is positive, but at the same time, things been quite volatile in terms of whether H1 is better than H2. Okay, that I don't want to say H2 will be weaker than H1. Okay. But we are quite positive on Q2.
Okay, and FY27, if you have to characterize it?
Last quarter also said it will be better than 26. I still stick by that. It will be better than 26.
The management of TCS, the stock has cooled off substantially from the highs of the day. It was up 4% at the start of trade, but now holding on to gains of just about 1%. What is still at the highs of the day, though, is the banking index. The Nifty Bank well above the mark of 58,000, heading back towards that 58,100 mark as well. So 800 points higher on the Nifty Bank. Ashish, compared to the Nifty Bank has been the better performer, at least in terms of the setup as well, that appears on the charts. But for the banking stocks, we just had a couple of banking results, both of them seeing divergent reactions, both Indian Bank and Bank of Maharashtra. But for the private lenders that announce results in the next couple of weeks, would that also provide an additional trigger if the results are good enough for the markets to move higher?
So in the NBFC segment, we are quite positive on the CV financiers, because we firmly believe that the way, for example, Shriram Finance, if you look at their cost of borrowing has come down significantly, which will get reflected into the margin profile of the company. And even if you look at from a growth perspective, 15 to 18% kind of growth is what is being witnessed for players like Shriram and Cholamandalam. So we firmly believe with a very reasonable valuation of 2.2, 2.3 times price to book and a ROE of more than 15-16%, with these kind of growth and cost of borrowing coming down, players like Shriram Finance, Cholamandalam looks very, very promising. Even a space which has seen a very sharp fall in the last 2-3 years time frame was the microfinance space. But what we are seeing is a very good traction coming into a lot of these players. So just to give you a context, company like Muthoot Microfinance, here we have seen a very, very strong growth coming into play, and also lesser dependency on the microfinance side of the story. So now a lot of these gold loan, personal loan, SME financing is also taking part of the overall exposure for some of these, I would say, MFI players, and this is also transitioning the margin profile of these players. So our belief is that now, since the credit cost is below 1%, and the overall net NP numbers are also very under very comfortable zone. So this is making this is looking like this entire NBFC story, particularly the microfinance story, is also looking very promising at current levels.
Okay, so that's about the financial space. Ashish, one segment that has done really well is the realty space. The index was down 30% from the 52-week high when we started this year. It worsened over time, but it has made a quick comeback. This month itself, it's up around 9%. We are getting all these quarterly updates from the companies, and they have indicated good demand despite the macro level picture not looking so good. Even today, the realty pack is the top gainer. It is at the day's high as we speak. All the realty names, be it DLF, Lodha, Brigade, across geographies are doing well in trade today. What do you make of this up move? Is this sustainable? Because at a macro level, the growth, of course, has slowed down, but it is not declining for now.
So what we have observed is that at least the luxury segment is doing extremely well for a lot of these players, and this is where I think Ubra, Realty, DLF, or Prestige, these are the players who are very, very active into the higher ticket segment, and that's where the growth has been really good even in the last 6 months time frame. Even if you look at the pre-sales data, it's also very, very encouraging. And now with inflationary risk also coming down to a great extent, I think this is also going to be very positive for the real estate space. But one thing, this space has already done very well in the last 6 months time frame. So maybe at current level, some consolidation is possible. But yes, from a 6 to 12 month perspective, this space is looking very promising. And Oberoi Realty and Prestige Estates, these are the two names which we are liking in the entire basket.
Oberoi and Prestige. Let's talk about Muthoot Microfinance. That's also surging on the back of the Q1 business update. The management also joined us earlier, and they had some positive, very positive commentary. So Ananya joins in to tell us the numbers and even what the management had to share, which got the stock so excited.
Well, yes, Muthoot Microfinance came out with a strong business update. You can see the stock also reacted positively today due to that. And if you go visit a year ago, the key concerns were the portfolio stress and collection quantity. Now, this quarter, this management also highlighted the focus has shifted back to growth, with AUM rising 18% year-on-year and disbursement jumping 49%. Now, but the most important part is the quality of this growth. Now, collection efficiency improved to 97.97%. The individual loan portfolio maintained near zero delinquency, and the company continued reducing its dependence on traditional group loans by expanding individual business loans and entering gold loan co-lending with Muthoot FinCorp. Now, the funding position has also strengthened, supported by CRISIL upgraded to AA-, a stable rating, healthy liquidity and rising digital collections. Now, the market appears to be recognizing this improvement, with the stock gaining around 23% in the past 1 month and nearly 35% over the past 1 year. Also, today, the management mentioned that the JLG book will grow more than 20%, and JLG will see more than 100% disbursement, likely to up a diversification target beyond JLG as well. Now, this may they have also revised their targets to 20%. Now, if momentum remains good, they said that they will be able to reduce GNPA by over 100 bips this year. So, yeah, good business update by them.
Good business update indeed. 12.5% higher on Muthoot Microfinance. Ananya, thank you for that update. Take a moment to thank Ashish as well for sparing time and joining us today on the show. Take a short break on closing bell. The market still extending its gains now, 24,220 on the index, 50 points away from turning positive for the week. Back on the other side with Abhiram Ileswarapu of BNP Paribas.
Welcome back. You're still tuned into Closing Bell. Well, let's talk about the AMFI data that we got for the month of June. That's the mutual fund data. And the overall trend suggests that the equity inflows have improved on a month-on-month basis. They have come in at 28,961 crore rupees, which compares with 22,897 crore rupees. It was expected to be an improvement on a month-on-month basis because remember, in the month of May, equity inflows saw a decline of 40%. And there was a decline across all the categories. And that trend has reversed. Now, large caps, small caps, mid caps, all three of them have seen an improvement on a month-on-month basis. Where for large caps, it has come at 2,067 crore rupees versus 1,600 crore rupees. For mid caps, it has improved to levels of 6,100 crore rupees, which compares with 4,385. Even small caps have seen an improvement to 5,600 crore rupees, which compares with inflow of around 5,000 crore rupees. This is something which is reflected in overall market move as well in the month of June, especially the outperformance that we've seen in the middle and small cap space. Some contribution that came in from the sectoral and thematic funds this time around, 1,469 crore rupees. So here is where inflows doubled on a month-on-month basis. We did see specific sectors doing really well, and those mutual funds seeing more inflows as well. NFOs is where the activity declined again. We did have around 7 NFOs in the month of June, but the inflows from them were just 460 crore rupees, which was the lowest that we've seen in a lot of months. It is actually at a record low in terms of inflows from the NFO space this time around. The SIP contributions, after declining in the month of June, did make a comeback in the month of, after declining in May, did make a comeback in the month of June above the 31,000 crore mark for now. And gold ETFs, that was the other thing that did see a decline in the month gone by because of the gold prices also declining sharply. That has made a comeback now at around 3,443 crore rupees. The multi-asset category, that was something that was declining in last couple of months, has made a comeback again. 4,810 crore rupees are the inflows. So overall, the momentum has improved and the mood as well across the categories.
Okay, thank you very much for that. That's the June numbers. Let's invite on the show Abhiram Elaswarupu, head of India Equities, BNP Paribas, on the show. Abhiram, before we get chatting about what to expect from the quarter, the market mood, can't not ask you about IT. You know, you've been an IT watcher for how many decades now? For a long time now. What's your take? Do you think the downside is protected from here on? Is there a structural opportunity to play IT, or it's just in a void?
Hi, Rima. Thank you for having me. So selling the structural story has become quite difficult with IT, as you can imagine, especially with the AI deflation theme kind of playing out. Now, that said, at least tactically, I think that we are near a bottom for IT services. As you may see, results have just started, and even if they're more or less in line, I think investors may start to look at the space more favorably. Bear in mind, the stocks have been beaten down considerably. They're under-owned, and valuations are quite cheap. Now, from a longer-term perspective, I think it will take IT services companies to demonstrate that their value proposition is still intact. In other words, clients will expect companies to pass back some of these AI benefits and for the companies to retain a little bit themselves so that they can protect their margins and sustain growth. So the short answer is, in the near term, I think there is an opportunity to buy this sector. Longer term, I think we'll have to still wait.
Ram, good afternoon. Thank you for joining in. Is the near-term opportunity the opposite for the lot of the capital market names? The kind of regulations that have come in, the details that are emerging from a lot of the derivative transactions as well, from the business updates that the companies have put out for the quarter. How are you playing this theme? There are multiple ways, of course, to play it, be it the exchanges, be it the asset managers, or you're just playing it through the discount brokers.
Well, to be honest, I haven't dug to that level of depth in terms of the in the space. Now, that said, I would say that asset management is a long-term theme in India. As you can see, you just showed the AMFI data that came out. Flows are very strong in India, and we have a pretty favorable industry structure as well. And the large players are getting larger, not just in India, but across the world. And so asset management is actually quite an interesting theme from a long-term perspective. Now, I think from a broader financial standpoint, we like the space. And now India has so many opportunities to play financial services. But I think at the very least one should look at private banks today, simply because they seem to offer the best growth opportunity in terms of credit growth, as well as asset quality. So if I were to break down financials a little bit, from the very beginning, we like private banks, drill down a little bit more selective into insurance, and then asset management.
Okay, that's about the financial space or the market participant space, Abhiram. One of the segments which has been consolidating for a long time in the last 2-3 years has to be chemicals because of inventory destocking, global demand pressures, and then we had the West Asia crisis as well. Despite them, some pockets, be it the amine segment where Balaji Amines, alkyl amines are up 90 to 100%. There's Accuras Chemicals, which is up another 50-60% this year. And I know chemical companies have different product profiles, so you can't put them all in the single basket. But are you seeing some opportunities available in the chemical space now? Because a lot of these stocks have not done anything in the last couple of years.
Well, again, I wouldn't go specific just chemicals, but I'll kind of broaden out the question a little bit more to say that if you see one of the big themes for the second half of the year actually is going to be falling commodity prices and falling input prices. So we start looking at from that perspective, there are several sectors to start playing out. One of them could be actually all the way from consumption. And consumption, then we go into, for example, air conditioning, then into four-wheelers, and so on and so forth. And we broaden that out into various other sectors. So chemicals per se, you'll have to forgive me, it's not a space that I've done a lot of work on. But I think falling commodity prices becomes a pretty reasonable theme to look at for the second half of the year.
Okay. Since you're talking about falling commodity prices, what would you make of the oil and gas space in that case? Because oil or gas, the prices there which surged are now coming back to stabilized levels. Do you think in that case you can look at some of these upstream or downstream companies in any form?
That sector has been very difficult to call, as you can understand. I mean, on the one hand, we had oil prices jump significantly, and on the face of it, that should have benefited the oil producers. Now, since then, oil prices have again fallen significantly back to the same price where they started from, more or less. So, rather than directly looking at oil companies, it would make some sense to look at what would happen through the rest of the year. One of the areas that you could consider as a outcome of falling oil prices could be autos. And that also comes down to the fact that within autos, the base effect is obviously a factor, but you see numbers actually looking really good, especially for four-wheelers, coming to high teens growth. I know some of that is partly led by the GST benefits and so on, but even if you strip that out, it does look like there is considerable demand. And I just heard you speak earlier about how corporates are generally talking about demand being still pretty good. So I would look at a more indirect way of playing oil prices falling, and one of them could be autos. Another way of looking at falling commodity prices in general could be to look at air conditioning companies. Also being, there's another tailwind that could be from the expectations of an El Nino, which would keep temperatures higher. I know it's at the moment the monsoon looks rather good, especially for the past 1 week or so. But there are calls for El Nino this year, and we think that air conditioning companies could be another way to look at it.
So is air conditioning your highest conviction idea that you are, selling to your clients? Or tell us the idea that you're most convinced about, your highest conviction.
I mean, within the consumer durables space.
Generally, all options open.
Okay. So in terms of a portfolio construction, Rima, I think one of the places where we are starting to see an incremental change is FMCG companies. The growth numbers are starting to bottom out. We are starting to see less pressure on their margins. So we've actually turned positive on FMCG recently. And so that's point number one. Point number two, I think I already mentioned about credit growth still being very strong. Deposit growth has lagged, I agree, but I think that will start to catch up. And so private banks as a second option. The third option could be four-wheelers. Air conditioning is the other one that I mentioned to you. And as a more tactical play, IT services companies. So I think I've given you enough on the plate.
Thank you very much, Abhiram, for joining in. Always a pleasure. And thank you for helping our viewers construct their portfolio, at least top down. We will get into a break. On the other side, we'll tell you what our dealing rooms are saying in our segment East Street Chatter. We also get you a few buy calls from our technical experts.
Welcome back. Still trying to hold on to that 24,200 mark on the index. But here's some special a segment for you. We are looking at India's wealthiest promoters. And in focus today is Solar Industries, where the Nuwal family's 73% stake is now valued at almost 1.2 lakh crore rupees. Nimesh is joining us to take us through their journey from explosives to defense and where they stand amongst India's top promoter groups. Nimesh.
Well, Armad, it's been a fascinating story, not only for the investors, but for the promoters as well. And as you rightly pointed out, the wealth of this particular promoter is over 1 lakh crore. But first, what this is company all about? Solar Industries. It's one of the largest, explosive and defense manufacturer, and it is based out of Nagpur. So that's the basic about the company. As I said, the promoter owns 73.1% stake in the company. Who are the promoters? Now, Manish Nuwal is the MD and CEO. He's the son of Satyanarayan, and he was a founder of Solar Industries. So Manish owns 38.9%. Satyanarayan owns close to 3.5%. The trust owns close to 29% stake. And Seema Nuwal, who is the wife of Manish Nuwal, she owns a small 1.37% stake. So combined altogether, the promoter holding is 73.1% stake. Now, what is Solar Industries? Just the graphic will come up for you. They started as a small explosive trader in early 90s. And only in 1995, Solar Explosive was incorporated. And from there, they've built up one of the largest package explosive facility out of Nagpur. So that's the small journey of what the promoters have done. Now, this is interesting, where the pivot came. The pivot came when Manish Nuwal actually joined the company in the 90s. He was actually one who was leading the defense and aerospace expansions since 2010. And the defense revenue for this company has grown from 5% to 20% under his leadership. And that's where you've seen a big pivot and a change in terms of market cap as well for this company. Look at the financials now for 2026. The company has reported a revenue of close to 10,000 crores, PAT of around 1,800 crores, ROE of close to 29%, and ROC of close to 37.5%. So the number shows for itself, and that's the reason why the company is getting this kind of market valuation as well. As I said, look at the wealth that the promoter has created. So basically, the overall market cap is close to 1.6 lakh crore, and of that, since the promoter owns little 73%, it's basically they own close to 1.2 lakh crore. Just to put into perspective where Solar Industries stand in terms of the list of wealth promoters or wealthy promoters. Now this is the whole list. Avenue Supermart stands out. R.K. Daman is hands down the topmost guy at close to 2 lakh crores of personal wealth, because of its listed entity. The rest are largely conglomerates or bigger MNCs. Nestle India, Bajaj Finserv, Bajaj Auto, of course the two Bajaj Group, Adani Group, Asian Paints, JSW, Wipro. A large part of these names are basically conglomerates or from larger corporates. Solar Industries stands out at number 10. The interesting part is today Solar Industries promoters are even above DLF promoters in terms of wealth creation. So that's the kind of wealth the promoter has created. As I said, they're currently at number 10. The promoter's wealth is close to, again, it's a wealth on the paper, right? It's just a market cap, but still, a Solar Industries, from a company based out of Nagpur from nowhere, is now currently the number 10th wealthiest person, having a personal wealth of over 1 lakh crore with a market cap of 1.6 lakh crore. It's basically not only the promoters, but even if you look at the shareholding pattern, the FIs have owned money, the DIs have owned money, and of course, promoters have created the biggest wealth. Now they are sitting on over 1 lakh crores of wealth as being a listed entity of Solar Industries.
Incredible. What a story, and what is that list? I was just looking at the list, and kudos to our team as well for presenting it in such a fabulous way. But look at that list. It is incredible.
Hard to break into. You've got the Adanis, Ambanis, and the Damanis, and for a Solar Industries to break into the list is very important. Yeah.
Of course, it's created wealth, but if you look at the list of the names, really for me, the two people stand out. Avenue Supermart, R.K. Damani, an individual guy, with no background from the market, started DMart, and look what he's created in terms of wealth. And of course, Solar Industries. See, the rest are all bigger names, right? Bajaj has been in the market for for a very long time. Asian Paints, JSW is a large group, Wipro is a large
all
group.
three of them are first-generation entrepreneurs, right? Mr. Damani, even the Adani Group, and Mr. Noval of Solar Industries, right?
And you know, what struck me to do this was, I was talking to some larger investors and larger corporates
who are the big
as well.
funds who have
Not many people know who's Manish, who are the owners of Solar Industries. I mean, these guys are sitting on over 1 lakh crores of market cap. That's the kind of wealth they've created. So it's hats off to and kudos to this promoters of Solar Industries from Nagpur, creating one of the biggest explosive company and having a market cap of over 1 lakh crore. The individual wealth.
Spirit of entrepreneurship.
Explosive company, explosive returns as well, right? Nimesh, thank you for summarizing that for us. A wonderful story and some fabulous graphics as well from our graphics team. Well, as we count down to the close of trade, Mitesh Thakkar is back with us to tell you what to buy or sell today for a reverse trade going into Monday. Mitesh, well, you're still not managing to get past that 24,250 mark on the index. So what do you do? What's the trade looking like for next week? And of course, your BTST calls.
Yeah, good afternoon. I think, I said that not breaking below 23,800 was very important. So we're back to the range at least. So any chance of, the declining movement accelerating has been kind of negated. But on the stock side, CDSL is a BTST for me. That's the BTST with a stop at 1419 for targets of 1415 or thereabouts, 1450 or thereabouts, sorry. And the other one is CAMS, which is also BTST with a stop at 779 for targets of 804.
Thank you so much for joining us with those BTST calls. It's time now for our segment D Street Chatter. Nimesh is back with us. He'll get us all the insight into the dealing room chatter as well as a few tidbits about the stocks that are up and about in trade. Nimesh?
A strong day for the markets largely led by the financials, and within financials is the PSU basket, PSU bank basket, which has done really well. Of course, the Indian bank numbers were good and that had a bit of a rub-off effect on the PSU stocks, but my sense is, in general, there has been buying interest in the PSU names at a couple of leading FIDs. So the moves in the PSU bank is largely backed by institutional buying as well. That's the overall sense. From a flow perspective, again, a strong day. I guess there is a bit of buying interest, and there's going to be a small MOC basket buying as well towards the end. So maybe this level of upside on the Nifty may sustain. Having said that, the bigger moves is likely if on a closing basis the Nifty closes about 24,350, 24,400 level. That's a bit of a resistance zone in the very near term. So if that gets taken out, maybe you'll see further short squeeze in the overall market as well. And the momentum seems to be clearly there in the broader markets. Even today, the mid-cap index is up 1.5%. And in general, the broader markets have relatively outperformed. And a lot of individual stocks as well are buzzing as well on good volume. So a good day of trade, despite a Friday. Normally we see a Friday factor playing out, but that's not the case today. It's almost at day's high. And to some extent, the PSU rally, especially in the bank stocks, is backed by FI buying as well.
What about stocks, Nimesh?
Well, so in terms of individual names, the first stock on my list is Indus Tower. It's generally been a bit of a drag, has relatively underperformed as well. But a bit of uptake in today's market, largely on the back of small buying. But largely, I guess the selling pressure from a domestic mutual fund is largely over. So they were a big sellers, and that seems to be over. And for Indus Tower, I think a couple of triggers to watch out for, which can come very soon. One, the Vodafone fundraising, that could be a big debt funding, that could be a big trigger for Indus. And also, there is a renewal of Geo tenancies which is pending. So if that comes in, maybe you'll see further upside there. So that's the first name. The second stock is Kirloskar Oil. Couple of initiating reports, we got the management as well. Seems like the institutional interest is quite high. So again, today, expect high delivery volumes, and there is a bit of buying in Kirloskar Oil. The third name is Thermax. It's not. It's been under largely languishing or been a bit soft of late. But my sense is that some of the domestic mutual funds are actively looking to buy or add Thermax at current levels. And the last is Coforge. Of course, the IT pack has done well today, but Coforge stands out. It's actually been a bit outperformer as well in the mid-cap IT names. And my sense is one of the leading family office has been an active buyer even at current levels in Coforge.
Okay, all right. Thank you so much for joining us with all those details, Nimesh. So that's the dealing room chatter. But let's get more stock specific now. Apollo Microsystems is set to acquire a major stake in Premier Explosives in an all-cash deal worth 1550 crore rupees. Ria is joining us now with all the details that she's picking up. Ria.
Well, yes, Apollo Micro is set to buy nearly 41.33% stake in Premier Explosives. This will be an all-cash deal for rupees 1,550 crores, and they will be acquiring the stake from the promoter group at 698 rupees per share. Now, the transaction is expected to close in December of 2026, and following the completion of this acquisition, Premier Explosives will come under the umbrella of Apollo Micro Systems, wherein it will continue to operate under its existing brand, although with scale performance. Now, the company Apollo Micro will be making a mandatory open offer to buy nearly 26% stake in Premier Explosives at 698 per share. Again, and already they've made the public announcement for the open offer as well. And after this, Apollo Micro can end up owning nearly 67.33% stake in the company if the open offer gets fully subscribed. And the implied valuation for Premier Explosives, as per this, comes up to nearly 3,753 crores versus yesterday's closing market cap of nearly 3,833 crores. Now, although this valuation does seem quite sustainable, do remember that the market cap of Premier Explosives had seen quite a bit of erosion in the days leading up to the announcement of this acquisition, since the street had widely expected this acquisition to come in. However, in terms of the rationale also, let's take a look at that. The company has said that they will be combining their complementary capabilities in defense systems as well as energetic materials, and this will enable some operational efficiencies for them as well as some enhanced R&D opportunities as well. And in fact, they will also see some broader participation in the defense and space-related programs going forward once the acquisition is completed. And this strategic acquisition will also support next-generation defense and space programs once the acquisition is completed. So on the back of this, Apollo Micro is trading higher by nearly 3%, but Premier Explosives, although it did open in the green, has come down by nearly 3% today, largely because the price of 698 was lower than yesterday's closing price.
Indeed, Ria, thank you for that update there. We also caught up with TV Chaudhary, the Managing Director of Premier Explosives, earlier, listening to what he has to say about the acquisition.
Yeah, as far as I am concerned, I will be continuing as Managing Director. I will continue my term fully.
Okay.
And then, yeah, next what happens, you have to see. It is the promoters who took the decision, and then they felt that this is the best deal they could get. And from my side, I have, of course, informed all the strengths the company has, and based on that, I think they have negotiated and taken the decision. FY27, yes, 600 to 700 crores is our target, and we are marching towards that. And that is and that too, as much as the 1,500 crores order book what we have, the target is to execute that first, and even if you execute half of it, we'll be touching 700 crores.
Okay, there were two big stories today. One, of course, was Apollo Micro acquiring Premier Explosives, and the other one was Dixon Technology, because finally it got all the approvals for establishing that partnership with Vivo India. Upasna joins in with the details. Upasna.
Well, finally the wait is over, must say. Now the company gets the long-awaited government approval under Press Note 3 for its JV with Vivo India. This literally means that the approval removes the regulatory overhang that has been clouding the company since some time ago. Now, JV was announced back in December 2024. Now, let us look at what the management has to say on the back of this JV. Now, JV could lead to a revenue uplift of 30,000 crore with a higher ASP as compared to Dixon's existing mobile portfolio is what the management had guided. And it had also guided that the post-regulatory approval, the operations are likely to start after 60 to 90 days. That is around Q3 FY27. Now, Vivo has 35 million annual volumes in India, of which 67 will come to Dixon, which is nearly about 22 million. And for FY27, company has given a revenue guidance of 56,000 crores and a volume guidance of 32 to 33 million, which is nearly flat. But this volume guidance is excluding the Vivo contribution. So the Vivo contribution in FY27 is something that we'll be closely watching out for. Now, let us look at what the brokerages are penciling in terms of volumes from Vivo from FY27 and FY28. Now, Motilal has retained a buy rating with a target price of 16,100 per share. It estimates 13 million volume in FY27 and 17 million in FY28 from Vivo. JP Morgan has given an overweight target with a target price of 16,700. It assumes Vivo to contribute 11 million Mobile volumes in FY27 and 22 million each. That is in FY28 and FY29. Moving on to UBS, it has given a buy call with a target price of 13,700. CLSA has given an underperform rating with a target price of 10,400. It believes that there is a limited room for upgrades now, as most of this is already penciled in the stock. And lastly, coming to Phillip Capital, it maintains the sell rating on the stock. So overall, we are seeing mixed reviews on the street.
Okay, all right. Thank you so much for joining us with all those details. Upasana, let's get in Anand Tandon, who's a market expert on the show as well. Anand, good afternoon. Thank you for joining us. What do you make of the big deal in the defense space and this approval that has come by for Dixon? Because the general approach towards Dixon is at least that most of it has been priced in and it will not make such a big impact on the overall stock price as well.
Well, in case of Dixon, the problem is that telephones are one of the lowest margin kind of assembly business. And while many of these companies have been doing it for a while now, the reality is that, the margin expansion that was estimated has been much, much slower and to a large extent non-existent. So you were expecting that overall the value addition, for example, in the assembly would be going up to, let's say, about at least 15 to 20% in India, given that it's much higher in China. But by and large, we are stuck in the 3 to 4% range. So that means that while your top line may grow, the bottom line impact will be somewhat muted. When you're talking about the defense space, I guess you're talking about the deal you just mentioned, that of Premier Explosives. Premier had a problem that they had no succession plan as such. To that extent, I think the fact that they have sold out is a good thing because it now makes continuity a far easier thing to do. And it has one of the biggest, or perhaps one of the most established explosive programs for the defense and aerospace. They've been making explosives, even those which go into ISRO's rockets. So they have a lot of experience. They have the capacity in that area. Therefore, overall, I think it will be something that is good. Of course, valuations can be debated. But by and large, I think it's good because the overhang of lack of promoter continuity now goes away.
Anand, stay on. Tomorrow, LTM, that's L&T Mindtree, will be reporting their numbers. Now, broadly, what the expectation is that FY27 will be better than FY26. Q1 will be soft. Expect a recovery in Q2 and Q3. The reason why Q2 will be stronger is because of a ramp up of two large deals, the CBDT and a large retail client. So therefore, Q2 will be higher. But Q1 will be impacted on account of the Middle East clients and some manufacturing related issues. So therefore, revenue growth will be seen on the flatter side. Margins, again, slightly lower, maybe flat, 15.1%. There is a part wage hike impact offset by the currency tailwinds. Profits will be up 4%. So in a nutshell, flattish Q1, but there is a recovery expected in Q2 and Q3, and hopefully the management guides for that when they report their numbers tomorrow. Okay, let's get into a break then. We'll come back with more on the market. Stay tuned.
Welcome back. Still tuned into Closing Bell and counting down to the close. But before we do that, let's bring in Anand Tandon, market expert, back with us on the show. Anand, post Indian Bank's numbers, a lot of these PSU banking names are doing well. We also have J&K Bank, which is higher by 15%. Indian Bank, of course, itself is up 10%. PNB is also higher. So there is this optimism that we are seeing in the banking space. What do you make of this? And this earnings itself, do you expect PSUs to outperform private banks? What's the general take here?
Clearly, it is a space which is reasonably valued and now growing. One of the concerns was that credit growth was somewhat muted for the last few quarters, but I think that is now back in quite a bit, and the balance sheets have never been better before, and especially for PSU banks. So overall, I think the sector itself is in fine fettle and is perhaps likely to be a good performer for the next few quarters at least, barring any accidents we see in terms of raising interest rates and so on. Even that, if it were to happen, will actually benefit the banks to some extent. So net, I think it's in a sweet spot, and therefore, and with unchallenging valuations, I think it's a space to be. Whether private sector or public sector is a matter of convenience and tactical positioning. My own preference always is to take private sector banks for the simple reason that they have a better deposit franchise, and therefore will be continue to gain market share against the public sector banks. There are, of course, now some convergence in terms of technology. The private sector banks had a huge head start compared to the public sector ones on technology. That gap is now slowly narrowing, and therefore, you may find that the incremental market share gains are slower to come. But despite that, I think you will see the public sector banks continue to lose market share. And from that perspective, notwithstanding the tactical positioning, I would suggest that one has at least some large private sector banks in the portfolio.
Anand, pleasure having you today. Thank you for sparing time and joining us. Wish you a happy weekend as well. Just pull up J&K Bank as Anand was speaking. A sharp up move that you've seen in the last few minutes for J&K Bank. That stock is now up 13%. That was already at a 52-week high earlier in the day and is now seen that very, very sharp up move over the last few minutes. What has also seen an up move continuing to extend its gains, it's Kalyan Jewellers, 8.5% higher now on the stock, the best week on record that the stock has had. And just before we close, look at Godrej Industries as well. That too has seen a very, very sharp up move in the last 15 to 20 minutes. The top gainer on the Nifty 500 now, 15% higher on that stock as well. So good going for Godrej Industries there, Sonal.
Actually, the list doesn't end of the gainers today, right? So many of them. Talk about Greaves Cotton, which is up around 11.5%. The standalone refiners are also doing really well. We've been talking about how product cracks are at a record high. So MRPL is one of them, up 8.5% right now. We do have Vedanta Iron and Steel, which is doing well in trade, 5% higher. Sagility is up 4.5%. Hormiz mentioned Kalyan Jewellers. That's the star performer of the week ever since the quarterly update came by. But on the downside, we do have a couple of these names which are coming some for profit booking. Spark, for instance, is down around 4.5%. Premier Explosives, we've been talking about that stock since the word go. That one is down 4%, has been acquired by Astro, the company today, and that is the other one which is on our radar. We have Equus, which is around down 3.5%. Swiggy, which was doing well yesterday, has come in for some profit booking as well.
Well, Swiggy has had this one up day, one down day move over the last 4 days, but as we close 24,214 for the provisional close on the index, so we still fall marginally short of that 24,270 mark, but the Nifty Bank has been the one that has stood out, 800 points higher on the index, closing above the mark of 58,000. The bulls would be happy with that. There are a lot of earnings to track tomorrow as well. Avenue Supermarts coming out with numbers, LTM coming out with numbers, and of course earnings season picking up pace going into next week as well. We take a leave on this edition of Closing Bell from Rima, Sonal and me. Thank you for watching Editors Roundtable on the other side.